Hi, this is Ian Foster from BeAWinningTrader.com, and this is my analysis on some of the instruments that I trade, namely a few of the Forex markets, a few of the major indices, and indeed gold and light crude oil for the week commencing the 13th of November 2023. I'm going to start by looking at the FTSE, and my first chart is a weekly chart time frame. And you can see that we've taken a breather last week because the previous week, if I just expand a little bit here, this bar here was a weekly, what we call a weekly bullish bar. Now, that indicates, based on probabilities, that there's a greater probability of the high of that being broken, the high of that weekly bar being broken to the upside before the low. And the high of that weekly bar, if I just click on it, was a high of 74.88. Now, we have attempted with the FTSE, if I click on the daily time frame charts, we've attempted to come down this week, and no more so than Friday, because on Friday that just passed, we had met a low round about, what was it, the low of 73.22. But quite significantly here, the FTSE rallied. And the close here is closer to the high than it is to the low, indicating that the market should break to the upside and achieve its daily price action objectives, all just based on probability. And the only time that that bullish daily bar would be negated would be if that low was broken first. So now we've got a bullish daily bar and we've got a bullish weekly bar from the previous week, not the week just closed on Friday, but the week from Friday previous, okay? And that means that we've now got two major time frames in the FTSE in sync with each other, indicating that the market should break higher. So what am I more likely to do? I am more likely to look for any dips in the FTSE for the beginning of the trading week, and I'm looking to get long the FTSE. Also, the US markets have been much stronger. And if we go to the S&P, again, I'm going to a weekly chart, and you can see that last week we closed, this is Friday week past, we closed as a very bullish bar. But again, it hadn't got the weakness, the S&P, that the FTSE had last week. But what it had got was a low range week. You compare those weekly bar ranges just by looking at the size of the weekly bar, and you compare this last week's range. And that is indicating that the market is consolidating. Now, when you get a low volatility day, week, time period of any kind, then it means that you are waiting for that market either to continue in the previous direction or it is preparing itself to change trend direction. In this particular instance here, obviously we've got a bullish weekly bar. We've got the FTSE now also indicating that we should take the weekly high out that was in place from 2 weeks past, and now we've also got that backed up by the S&P also indicating bullishness. So I would be hopeful, based on what I see, that this market is going to continue to the upside also. So I'm bullish for the beginning of the trading week. Certainly, I'm bullish for the indices. Of course, we can go and look at the DAX also, which is another market that I trade regularly. And if I go to the DAX daily bar, you can see we've closed also on Friday with a very bullish daily bar DAX close. And if we look at the weekly bar on the DAX in relation to that, it has got a very similar setup pattern to the S&P. A low range week in comparison to the previous week, certainly in these other weeks. You can see it had a low range week in here and it reversed quite significantly on the close on Friday week past, and now we've got another low range week. So that there is also give me an indication that is a higher confirmed low. People may call them a higher confirmed swing low. I have a particular set of rules that I use in my price action analogy and methodology, and that is indicated that that is a confirmed low in place. And if we look at that low there has certainly been a higher low than any low down here. So It's indicating again bullishness, certainly to begin with. Of course, and nowadays we have to be very, very, very flexible, and we have to trade with what we see because the markets can turn around on a whim. But looking at the bigger time frame charts, which is where you get a real insight of where these markets should head, based again, everything has to be based on probabilities, putting the probabilities on your side, um, then it would indicate that I would certainly be looking to be getting long. So let's look at a couple of the Forex pairs now. So the first market I'm going to look at is the pound Japanese yen. And again, I'm going to look at the weekly chart. You can see that the close on Friday week past, so 2 weeks ago, we had a very bullish weekly close. Not only had we a very bullish weekly close with what we call an outside vertical bar to the upside close. The most powerful single price action bar that there can be is an outside vertical bar. What is it? It's when the present bar, has made a lower low and a higher high to the bar on its immediate left, of which this bar did. Now also, and I'll just zoom in a little bit here, you can see that last week we had a very low volatility, low range bar, low volatility week on the pound yen. And I have to say that I felt that a little bit myself, okay? Because we're getting no continuous moves, no follow through moves. Once we get an intraday or an intraday setup, it would go up a little bit or go down a little bit, and then all of a sudden it would bounce the opposite direction. And that is reflective on the low volatility bar. So again, it's a very 50-50 bar. What I have to look at then is flick down to the daily time frame chart, and I can see that we had a bearish bar on Thursday, but we've closed now with a bullish bar. But you can see 1, 2, 3, 4, 5 last week. This market has totally went sideways, and we can really and truly just draw a trend line, a horizontal line across the top of this market and across the bottom of this market. And there's where we are range bound. We are range bound up here at the highs of 185.95, 185.89, and down here at a low of 184.57 and 184.54. So you can see on the daily time frame chart where we are range bound. And again, we've got the weekly bar not indicating an awful lot, indicating really and truly that we're in a period of consolidation, in a period of low volatility, as I've already said, indicating that this market is either taking a breather to continue higher. So in other words, sterling is going to get stronger against the Japanese yen, or it is preparing itself to head south, head down. So again, unfortunately, I will be looking more at the daily chart for the beginning of the trading week, not the weekly, because you can see, because it's such a small range weekly bar, I cannot give it a great significance. The high or the break from the high or the low of last week certainly would be where I would be looking for. So I will be keeping an eye on last week's high, which I've said to you is at 185.96, 97, and the low last week, which is 184.54. So you can see that we're really with about 140 or 50 pip range, which is not much in the pound yen. So I'm expecting action in the pound yen this week. That's what it really boils down to. And I just hope that I can get in on the correct move and be able to get my follow through signal once I get entered into the market. So again, I will be looking just to trade what I see. My initial direction for me that I will be looking for will be to be long, simply because with the bullish daily bars, and then perhaps watching the weekly bars, the weekly bar highs of last week to see is that going to be broken to the upside. But again, I have to have flexibility. So let's look now at the pound dollar. And the pound dollar here, we have got a bullish bar on Friday. But you can see all of last week, the pound dollar, otherwise known as cable, was weak. And that has also reflected on the weekly chart, because look what we've got on the weekly chart on the pound dollar. We've got a very bearish weekly bar. And that is indicating that we should take the low of last week, which is a low of 121.87, out to the downside. We should break to the downside before we start breaking to the upside up here at 124.28. So on that understanding, then that is indicating that the pound is going to be weaker again the US dollar throughout, or certainly at the beginning of the new weekly period beginning on Monday the 13th, and therefore my thought process trading the pound dollar will be to look for short signals on an intraday basis with lower confirmed highs on a smaller time frame chart, with the objectives of taking last week's weekly bar out to the downside. But because we've got a bullish daily bar, we may not see that weakness to begin with. Okay, we may not see that, so we'll just go with the run. I will just hold back a little bit because because of the volatility in the market, I'm going to really concentrate more on the short side on the pound versus the US dollar to begin with. Now, the euro dollar we will look at. And the euro dollar again, it's pretty sideways also, because you can see we've had a lot of negativity here. We've broken these higher lows here, indicating that we're now in a trend change. We have bounced now this last 3 or 4, 5 weeks. We've bounced, okay? 1, 2, 3, 4, 5, yes. But we haven't moved. We've just went up to this previous support area, which now is resistance. We've broken up through it. But again, I'm looking again for any strength in the euro dollar to be used for the lookout of signals to take short trades, in other words, lower highs. And you can see what we've had. We've kind of had the beginning of the week was okay, and then the last 3 or 4 days from Tuesday it went pretty sideways. With bullish bar, broke the low, bullish bar, totally. We broke the high, then achieved the price action objective. So we did Wednesday, we done that on Thursday. We had a bearish bar then on Thursday, indicating on Friday that we should take the low out, and again we done that. But look, with a low range bar on Friday, so indicating that we should break to the upside. But because it's a low range bar, and then when I click on the weekly bar and I can see it's a bearish weekly bar, I will be not overindulging in trading the euro dollar at the beginning of trading on Monday. I will be letting it play out a little bit. And again, as I always keep saying, trade with what I see, but it will not be one of my most favorite markets, because there's one thing that we can do as traders. The only thing we can do is control our risk, but also we must let trades come to us. We must not manufacture trades that do not exist, because if we start doing that, that is a sure sign that the markets or that particular trade certainly is probably not going to work out. So let's just finish off by looking at crude oil and gold. If there are any other Forex markets that you would like me to analyze for you, please just send me an email at ian@beawinningtrader.com. ian@beawinningtrader.com, and I will gladly analyze based on my price action methodology and my price action analysis on what the probabilities are for that market in relation to being in a downtrend, uptrend, sideways, or whatever. Okay, so the euro dollar, just to repeat, is not my favorite market to begin with for the beginning of this new trading week. So if we just click on and look now at gold, let's take a look at what happened in gold. Now, gold has been strong, folk. It started off with a bullish weekly bar that was a lower range bar than the previous weekly bar, indicating this market was perhaps going to gather a little bit of momentum, whether it was going to continue in this downward trend that it had from the previous week, or was it now going to rally. And we all know now in hindsight that it rallied, but we didn't have to guess, because understanding a daily single price bar and with a close closer to the high than the low, that was indicating bullishness, with the high should have been taken out before the low, of which it was. That was week 1. Week 2 was the same, week 3 and week 4. And then last week we had an inside week, folk. Inside week last week, when we were analysing this time last week. And the objective was still to take the high of this particular bar out to the upside. So I was still looking for, on gold last week, initially, I was looking for any dips in the market as opportunities from which to go long. But again, what did we get? We got more lower highs on an intra-week basis. and this market went down and it took out that low when it, technically speaking, based on probabilities, it should have taken out that high. So it broke that low of 1953.59, and indeed it is closed at 1938.62. So it's a very bearish weekly bar on gold, and you can see that has also had a reflection on Friday, because on Thursday we had a bullish bar, just broke and achieved Friday's daily price action objective by taking that low out and no more. And with it doing that at 1947.44, and the next day it went to a low of 1944 by $3, and it coming bullish, that would have indicated to me, my thought process would have been, it was only able to break this low and no more and close bullish, and therefore this market may now start heading up the page again on a daily perspective, but it didn't. It got slammed big time on Friday. So both now having the daily and the weekly indicating weakness, then we certainly want to be looking for any rallies on the beginning of our trading journey. On Monday, we were wanting any rallies to be used as opportunities by looking for lower intraday highs on the smaller time frame charts, with the objectives of taking last week's lows out to the downside. If I just put on a 4-hour chart, you can see that we're already in red bar mode. That is my software indicating not only based on our price action methodology, but based on the sum total of selling and buying pressures, that there's greater selling pressures, because this market is now already in red mode. It had been in blue mode, went into green mode, indicating sideways, a possible change of direction, and then that was confirmed once the red bars started to come in. So that further strengthens my philosophy based on what I'm seeing on the bigger time frame charts, that any rallies in gold are opportunities that should be taken to enter shorts. I'll just finish off with crude oil. Crude oil has been a fantastic market for me over many years to trade, and indeed I've had some fantastic trades in crude oil over this last week and 10 days, all based around this very bearish weekly bar, because we traded for 1, 2, 3 weeks inside this bearish bar, where we knew that the probabilities were much greater to break the downside of that weekly bar here than they were to break the upside. Yes, at one stage it looked like this market was heading up, but we knew that the hurdle that this market was going to gather strength again, had to cross, was this high here. Now the market didn't, and it broke down, and again we had a continuous down move last week, so much so that I'm glad to say that I was in a short position from up at 84.75, and the market went down to 70, what was it, 74 something, I think, yeah, no, 75.24. So that was very pleasing. Now I am flat crude oil, so I will put my hand up there, and the reason being because we've seen a bit of a sideways action here this last couple of days. We had an inside bar, so we had on Thursday, and again, with this market having made such a move down, then that was like the swimmer going down to gather breath, perhaps, and then to change direction and not continue. So we know that when we have a low volatility or inside bars, that is indicating that a market is either continued to, it's gathering breath to continue in the previous direction, or it's gathering, more breath or strength to reverse position. And indeed, when we seen Friday's price action, of which it broke the low of Wednesday, or broke the high of Wednesday, I should say, when it was a bearish bar, then it was time for me to get out, considering the market had been so good to me anyway. So the high was 77.82, and we went to a high of 77.93 on Friday in crude oil. Now, what does that indicate to me? Well, I can see that there was certainly previous strength, support up here, and that was at about 81.80. I maybe just below it, let me see the low, 81.70. Yes, 81.70, 81.80. So therefore, I'm expecting an initial intra-week rally in crude oil, probably for this market to continue going up initially. But because we've got a weekly bearish bar that's very bearish, where the close is closer to the low, I'm again on an intra-week basis going to use crude oil, I believe, for taking short positions. In other words, I'm going to use any rallies in crude oil, I should rather add, and I will look at what will indicate to me whether to go short or not, because in case the market's going to rally, I would need to see on an intraday or an intra-week basis, a lower time frame high. So I'll be looking at perhaps 60-minute charts, maybe 15-minute charts. I might go down to, if I can see a lower confirmed high, and a lower confirmed high is a high when the market does this. When the market goes back up again and does this, I'll just draw this for you for me to explain what I mean. That, and making sure that this low, this high here, is a lower high than that high. And once I would get that, then because the weekly bars indicate that we should take the low of 75.24 out to the downside, then that is what my objectives will be on crude oil. So initially, I will definitely say that the market looks very much poised, that it's going to head north, in other words, up. And then laterally, it looks like that this market could be starting to head back down again. Okay, so again, let me remind you that we are very much looking for market moves based on probabilities, based on price action analysis, but also being flexible in our approach. So if you want to learn more, go to https // beawinningtrader.com/masterclass. And in there you can sign up and you can watch in greater detail one of my recorded trading masterclasses where I will explain my price action methodology and how we use it in conjunction with my proprietary software trading tool to give us an edge in picking out trades in the market. And at all times knowing exactly, because once you have a signal, no matter what methodology you're using, everybody, once you have a methodology that creates a signal, whether it be a short signal or a long signal, you must be able to also have a methodology. That same methodology must rather be able to tell you exactly when you're wrong. And I'm glad to say we can do that. And by having that knowledge, it means then we can control our risk. Because there's one sure thing, as a trader, unfortunately, we are going to be wrong. Okay, but it's the matter of once our winning trades are going for us, that we're going to take more out of our winning trades than we're going to lose on our losing trades. So I hope you enjoy, and I must say that on my description in this video on YouTube, you will see a link to my Discord channel. It is a channel that you can get free access to for 14 days, and thereafter then you have to subscribe. It's £99 per month, but in there I am giving my live trades that I'm taking on the pound dollar, and also we're doing live trades on the DAX. And our results, I have to say, have been and continue to be excellent. Okay, and excellent, I mean that we're up, is it almost, since I started this service in the middle of August, we're up now about 1,000 pips or something, a pound dollar alone. Okay, so it's working very well. So, look, thank you. I hope you enjoyed my analysis. And if you have any questions, remember Ian at beawinningtrader.com. Thank you.